All right, what's up, Hero Team? Um, Random video. I'm feeling excited for some reason. The markets have been such a crazy ride these past 2 weeks. Just been studying up a bunch. Just really focusing on a lot of naked trading, a lot of Fibonacci tools, and really solidifying my strategy as to just adding more to my analysis and confirmations and confluence. And I'm starting to really understand a lot uh, of terminology, and things are just getting really clear for me at this point. And I'm feeling that I've been holding this one for a minute, but I think I'm ready to explain Fibonacci. This video is shout out to Genesis. Uh, he's gonna be one of my proteges one day. He's been asking for a Fibonacci video, and you know I'm hopeful to explain this the best I possibly can, because Fibonacci is a lot of numbers, a lot of algorithms, arithmetic, yada yada yada. It's pure math, but in a sense, it's very easy to understand if you just learn the basics of it and how it works. Okay, so Fibonacci, pretty much sum it up real quick. You've heard this before. Fibonacci is a way of life. Fibonacci is used in everything, from the beginning of this universe to a leaf to a plant. Fibonacci is everywhere. It's what goes up must come down, what goes around must come around. Um, it is a way of life, okay, in a sense. Uh, Relative to the charts, what goes up must come down. Okay, how long for? Uh, that's what Fibonacci's for. Okay, so what I want to talk about, most used common tool is Fibonacci retracement. And pretty much Fibonacci retracement helps you see uh, how how long the chart is willing to move up or down before it does the retrace in the opposite direction, and it has levels indicating how far that retracement will go as to a switch in direction or just continue of the trend. Um, Perfect example, I'm on AU, 4 hour chart. Keynote, higher time frames equal better accuracy as to the levels that it hits, but I've noticed that Fibonacci works. It can work on almost all time frames. I wouldn't recommend going anything below 15 minute, but the levels are there. Um, how I like to see this, how this helped me, how it helped me understand is that Fibonacci is just basic support and resistance levels that let me set these up because better visually. These are just all resistance and support levels. Yeah. And the reason why these match up, you could see that these levels are all respected. They all respect. They're there for a reason. Um, let's see right here. Okay. So the reason why they're here is because when you set up a fib, you're always going to want to set it up from high to low. Okay. So depending on which way you want to figure out the retracement level, you're always going to want to go from the wick to the body. But I like to go from wick to wick because I realize that wicks are respected even to the last movement. So wicks, I like to go wick to wick. Okay, guys? And as you can see, it matches perfectly. Okay? So there's key numbers when dealing with Fibonacci. Key numbers when dealing with Fibonacci, okay? So let's say, so I got it from high to low. Obviously, the downtrend isn't over yet, but I'm just using this as an example. Like that. Okay. You can see that, look at 38.2 and 50%. Okay. 38.2 and 50% are the magic numbers when dealing with Fibonacci. Okay. They're highly volatile levels. So every time you set up your Fibonacci level, always assume that 38.2 will be hit first, because that would be automatic retracement down or break for the 50%. Once you break 50%, once 50% is broken, 61.8%. Okay. The higher the number, obviously the trend, it's switched already, but it also can mean a bigger drawback. So it could 61.8 drop to the 50, 38.2, retest all the way down to 23.6. Or retest the 50, retest the 38.2, retest the 50 again. These are all levels that are there to help you see how quick a retracement is. The 38.2 and the 50% are always retracement levels. So even if it hits 38.2, it could tap the 50, retrace up, or tap 38.2 and retrace up. Okay? If it ever breaks the 38.2 like that and goes down, then that was a fake out. It was a failed uptrend and shot back down. It most likely will go back down to where it was intentionally supposed to go. Okay. I want to find a better example, but let's see. Let's see right here. Okay. So what I learned was when Fibonacci, where to place it. You're always going to want to place Fibonacci on a volatile move so pretty much on a big push up, big push down, you're going to want to set up your fibs. Okay. Cause that from a high to low, you want to see how far retracement will go up and in what direction is it going to intentionally go for the next day or so, or forever, whatever time frame you're trading. You get a good idea of the switch. Okay, so that's why, hence Fibonacci retracement. It's the retracement you're looking for and how far it's going to go up or down. Okay, so I'm going from high to low. Okay, I set it up so it just fills up the chart. Okay, you got the 38.2, the 50%, and the 61.8. All right, keep that in mind. 38.2, 50%, 61.8 are your magic numbers, okay? The higher the retracement up, the slower the retracement down. The smaller the retracement up, the faster the retracement down, okay? Keep that in mind. So as I'm going to say, the higher the retracement up, right here, retraced all the way up to 88.6. Okay, that's consistent uptrend. Broke the downtrend, retracement went all the way up to 88.6 before it actually broke for the downtrend. Okay, if it were to hit, the reason why it's downtrending is because it has to retrace down if it doesn't break 100%. Breaks 100%, then that creates a new high, and then, you know, this fib is over with. 100% retracement, you're going to get ready to set up a new fib because it broke a new level, and you're going to try to find that low to high to find how that's going to drop. Okay, so 88.6, you could see retraced all the way and tapped, went down to the 50%. 50%, the magic number, okay? When it's above 50%, always know that it has to tap 50% first before it drops down to 38.2, okay? So 50% tapped, got rejected, shot straight back up, hit this level, okay? Head and shoulders right here. You can see, boom, boom, boom. Rejection, hit the 61.8, rejected up, shot all the way back down. You can see it tap the 38.2. Okay, your magic numbers. These are magic numbers. No matter which way you're going, up or down, magic numbers. You want to you could retest these zones over and over. Okay, but just know 38.2, 50% are immediate retracements up or down because they are honestly they are magic. They will move volatile once they hit these levels. Okay, you can see hit 38.2, 61.8, shot all the way down to 38.2 again, 50%, 38.2, double bottomed, and continued its way back up. Okay, and it still didn't. It's still, you know, you can see it. Still never broke the 100%. Still hasn't broken, and till this last second, it still hasn't broken 100%. So in a sense, you could have rode this whole entire fib all the way down until it broke past 23.6. Okay, look at that. That's beautiful. It actually did break 100%, but easily got rejected. Let me see why. Okay. You could do a fib from here to here if you like. It doesn't really matter. It's still a high to a low. Look at that. Boom. 100% double topped. You can see it. That's why it dropped. Maximum exhaustion at the 100% line. You can see that. Let me zoom out. One, two, three. See how this 38.2 zone, total consolidation, it wasn't going to shoot up anymore. After, when you see levels being broken like this, especially from 100% all the way down to the 38.2, actually broke below the 38.2 and it was wicking up and tapping the 38.2. That is a sign of a sell. That's a sell indication right there. Okay, so many things. All right, even from there. Okay, if you didn't know what was happening, do it from here, high to low. Okay, so look, I could have done it from here to here to see when it would retrace to the upside, since I'm going from a move up. Okay, move down, Move move down, you're looking for levels of retracement back down. Okay, so 38.2 rejection, 50% rejection, 61.8 rejected, you know, and then the retrace to the upside. Okay. For an up position, for a buy position, okay, same thing, just but backwards. Okay, 23.6 respectively, 38.2, 50, 61.8. Same thing. The bigger the longer, you know, the longer the drop, the longer the zone, the longer the retracement back up. Okay, I like to say that on Fibonacci when going for the when setting up a Fibonacci towards the buy side, that once it breaks 50%, that thing's going to shoot down. When you're looking for a sell, once 50% is broken, you're breaking many levels. Okay, so you could see it broke. You could see right here, 38.2 was the zone. It was consolidating right here, freaking out. Went all the way to the 61.8 almost, shot up. Okay, so this one would not have been anything. You wouldn't have traded this. Maybe from right here, when it shot back up past the 23.6 and wicked, that would have been a nice sell, just because you know that's a lower low. I mean, a lower high. It's not gonna do. It's not gonna go for the uptrend. It attempted it, but all it did was double. You know, all it did was hit resistance. That's all. Okay. It broke 50%. You could see it wicked up again to retest the 50%, but it just plummeted past the 61.8, tapping it. Okay. Once it passed 50%, I honestly think that it's always going to be a sell. Okay. And you could see it did 100% retracement. It already passed that zone. Okay. So US dollar has been strong this week. Major. Now, let's give another example. So your magic numbers again, 38.2, 50%, 61.8. Okay. Let's just go to the good old Euro USD. Now, 4 hour high to low. Okay. This one looks really really vague. It looks really obvious. Obvious movements, perfect movements. So let's say from right here, we could spin down to this wick because that is a low. Can retest a wick. Boom. Okay. I like to be precise as possible. You can see that from this point, this could have been news. So I don't know why it dropped so fat. Can't recall. On yeah, June it dropped. You can see automatically retested for the 50%. There is a move. Oh. What's going on? There we go. Okay. You can see that immediately retested up, retracement up, 50%. Okay. When when you see rejection like this, automatic 50% rejection, I always honestly, like, I'll sell off of a rejection off 38.2 or 50%, but always best to wait for the second candle because you never know. Um, a drop like this is sketch, but you can see it got rejected and retest. So when you're trading fib, I'm telling you, 38.2, 50%, the magic numbers are always going to be there. Like, they're always going to do you a favor, as in when you see those wicks, when you see the movement about to hit 38.2 or 50%, you're always going to see consolidation. You're always going to see a sporadicness. You're going to see the charts make a decision, and that's when you use trend lines. That's when you use, you know, uh, that's when you use your resistance levels. Like, you need to still use technical analysis with fibs, but as to just knowing that after just going off these levels, you can just know that retest will come. Okay, it could always even shoot past down this point, but it has to break this level, has to break this level, has to break this level. It's these magic numbers are really, really helpful. Okay, just keep in mind 23.6 to 50% is quick retracement. Anything above 50% is long-term retracement. Okay, so 20. Okay, so anything below is quick, anything above is long term. Okay, so I'll give a good example again. 78.6, 86, 61.8. So look at, you can see 78.6 can break the 88.6 line. You can see that this zone is zone is long term as to the 4 hour. Okay, so meaning you can see smaller zones once you see smaller zones uh, in the smaller ranges. 38.2 has a small range, 50%, 61.8. And then once you pass 61.8, they get bigger. Okay, these zones are the ranges that they respect. Okay, so the bigger the zone, the bigger the opportunity for it to still go up or have a massive drawback. Okay, so you could see 78.6 or whatever number that is, broke, and then just wicked double tops right here. triple tops. Okay. And that's how you know that it's not going to break, because the previous high, look to your left, unique space, and lower high, lower high, lower high. Okay. Downtrend. You could have sold knowing that this fib level was not going to go any higher. Okay. At least until it hit back, at least until it hit this. And which is cool, because with fibs, you can do fibs within fibs. You know, I'll zoom in. It's a lot of chaos, but you can still see that right from here to here. 50% was the line where doji. You can see it shot straight up 50%. Okay. Second I saw this, I would have bought and then wait until the retracement at 38.2 or 50%. You can see it tap 61.8 and then close that 50%. Once it closed like that above 50%, you know it's a buy. You know it's a buy. Okay. You know it's a buy because that wake up engulfing candle. I mean, this is a big push, and it hit closed above 50%, and you can see it shot up, creating a lower high. Okay, and you could have sold, you know, after this candle. You got to use logic, just straight retracements. It's just support, and it's just, I mean, it's just retesting and retesting and retesting. Okay, so boom, wick, didn't break, wicked again, didn't break, and then you see it close like this. Okay, and there's your other opportunity. You can do this all day. Boom. Okay, now we get all the way until here. Was the retracement back up, and it retested all the way to the 23.6 before it shat. Okay. And so on. 60, and it respected this level. This support line right here. Now, knowing that it took this long before retracement were to happen, like I said, it took a minute for it to actually do this. This was long term right here. Okay, it wasn't quick. But you know that moving sideways does not mean that it's going in an uptrend. This is moving sideways, pretty much. So it was a slow retracement up, okay? And then it had one final push for that higher high, but it couldn't do it. And it tapped 23.6. Now, at this point, I'm thinking before this, if it were to shoot up to 23.6 like that, then it's gonna plummet. It has to plummet, because you know how many levels it has to break, and like for it to be consistent, it has to retest, 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 and boom, over time. Okay, if it hit 38.2 and shot up right that, could have created a new higher low. Could hit the 50%, created a new higher low, but now it went all the way down, and the longer the range, the longer the retracement. Okay, and you could see that it did exactly that. slow. This was a slow buy. You could have honestly bought because once it got rejected, you could have bought, or could have rejected and shot down. But that's where you see this. This is where you these little ranges right here are like little breaks that you just could buy off of because they're small zones. Yeah, I kind of lost a lot. I'm losing my groove on this chart right here. It respects level. It respects time frames. It respects all time frames. Honestly, I like to think all charts are respected. People always say, "Oh, well, these indicators don't respect smaller time frames. These don't. These tools don't respect smaller time frames." And what are these time frames there for then? They're just not useful. They don't respect things like no time frames create the bigger time frames. It doesn't make sense how it wouldn't respect um, Fibonacci. It has to respect Fibonacci. Uh, it still would respect this level. You know, even if you zoom into the 5 minute, that level's still there. I mean, it's gonna hit that level. Look at that. It's gonna hit these levels. You could trade within the levels, if anything. Look at that. Boom. Went straight down to that, respected it, and then broke, respected, and then broke. Like you can trade within the levels. Fibonacci is a piece of work. Honestly, I love Fibonacci. I use it all the time. Um, I have to use it. You have to use it because it gives you perfect idea of what's happening to confirm your trade. I don't really like trading view. It lags and also um, it's user friendly, but you gotta pay for things in order to use its full capability. Okay, and this is the daily for Euro, and I got this all marked up already. Um, on the daily, it's just total consolidation right here. Looks like it could shoot up. We still got this level. Anyways, um, I think I could explain this a lot better. Let me know, have any questions, and I could definitely help you out with Fibonacci, guys. I don't haven't seen a lot of helpful Fibonacci videos. I've seen one that changed my mind about a lot of things. It was really, really good video. I need to find it again. Maybe I could post it. But if you have any questions, just hit me up, guys, and figure this out together. So let's make this money.